Decent jobs report. Why are markets so unenthused and uninspired?
Well, I think a lot had been riding on the headline numbers. The whisper number was like 225,000, so it did come in below that. But I think investors will reconsider. This was fundamentally a very good jobs report, and the headline number could still have been depressed to some extent by the cold winter weather. So uptick in the participation ratio, revisions upwards in the previous 2 months. It's indicating to us that definitely the U.S. economy is on a strengthening trajectory.
Now, as we get firmly into the second quarter right here, it seems like we're going to be seeing this sell-off in tech stocks in particular. Is that going to define the quarter, people taking profits from these spectacular gains that we've had?
I think it's going to be a quarter where you'll still see a high degree of volatility, and a degree of profit taking is probably natural in these kind of markets. But I don't think it means that tech stocks are going to necessarily underperform in the second quarter, but investors are booking a little profits right now.
As we also continue into the second quarter, is there room to come back into the emerging markets? A lot of people are also talking about the carry trade with Japan.
I think as far as the emerging markets are concerned, it's quite interesting that although the mutual fund data from EPFR shows strong outflows this year, if you look at estimates of broader portfolio inflows from the Institute of International Finance, they're actually starting to show that investors are coming back to the emerging markets. So for those with a longer-term investment horizon, now is a good time to start thinking about where you would like to be positioned.
A final note then, as the U.S. looks to be speeding up a bit, there's a definite feeling that China is slowing down. How is that affecting views in terms of fund flows?
Well, that's one of the factors which investors are particularly worried about, is does China face a hard landing because of the financial tightening? Our view is that those fears are actually exaggerated, that the PBOC is trying to get the growth of credit down. If the numbers come in too weak, they easily have the fiscal and monetary space to reverse some of those policies. Indeed, we saw what amounted to perhaps a mini stimulus package announced last week. So first quarter numbers definitely bad, but probably that will mark the low for China this year.
We'll leave it on that note. Jeff Lewis, thanks very much.